Picture this. A trader sits in front of the screen, heart racing, finger hovering over the mouse. Outside, the world goes on indifferent. The kitchen clock ticks forward. The bills keep piling up. The market keeps moving as it always does. But inside the trader's mind, something is about to happen. And it's not the chart that will decide the outcome of the trade. It's not the indicator, not the news release, not the sudden spike. It's something far more dangerous, an invisible force that hides within every trader, waiting for the perfect moment to strike. That force is self-sabotage. And here's the terrifying truth. It doesn't begin when you click buy or sell. It begins long before that. Most traders believe they lose because their analysis was wrong, their stop was too tight, or they picked the wrong market. But those are surface-level excuses. The real cause runs deeper. The real enemy is born the moment the trader blends two realities that should never mix: the cold, indifferent reality of the market and the emotional, chaotic reality of personal life. When the mind connects overdue bills, accumulated frustration, or even the thrill of a good day with the act of clicking buy or sell, the loss is already written before the trade even begins. Think about it. The market doesn't care about your deadlines. It doesn't care that you've been losing all week and desperately need this one to work. It doesn't care if you fought with someone at home, or if you need to close the month in profit to pay the rent. The market is indifferent. It's a machine. But the human brain doesn't operate like that. The brain feels pain, pleasure, fear, and urgency. And when a brain that is wired to avoid pain and chase pleasure collides with the ruthless indifference of the market, the stage is set for self-sabotage. Here's the brutal truth. Many traders know exactly what to do. They know the system, they know the risks, they've studied their plan. Yet at the critical moment, they ignore it all. They don't fail because of ignorance. They fail because the unconscious mind, loaded with fears, insecurities, and hidden desires, takes control without permission. And this process is so subtle that in real time, it feels rational. The trader convinces themselves, this setup is close enough. I'll just move the stop this one time. I'll increase size because the analysis looks too good to miss. These thoughts appear logical, but they're nothing more than emotional impulses wearing a mask of reason. And here's the key. Self-sabotage rarely appears as a single dramatic blow. It's not only the reckless all-in trade that wipes out an account in seconds. More often it's gradual, slow, like rust eating away at the steel of a ship. It starts with tiny deviations, a stop moved, an entry taken late, a profit cut too early. Each small betrayal of discipline reinforces a habit, and habits, once repeated, become automatic, until the day the trader realizes they're no longer the one making the decisions. The pattern is, this pattern feeds on something even deeper: identity. If deep down you don't believe you are capable of consistency, if you don't believe you deserve sustainable profit, you will always find a way to prove that belief true. The human mind hates contradiction. If at your core you see yourself as someone who always screws it up at the last minute, your brain will ensure that prophecy fulfills itself. That's the law of internal consistency. No matter how much you study or prepare, if your self-image is sabotaged, your results will bend to match it. That's why self-sabotage is so dangerous. It doesn't just attack your strategy, it attacks your identity. And when identity clashes with goals, identity always wins. The market may open its doors, offer clear opportunities, but if the voice inside says, "I can't do this, this isn't for me, it's just a matter of time before I fail," you'll unconsciously take actions that make that voice right. Stop for a moment and reflect. How many times have you caught yourself thinking, "I knew I shouldn't have done that"? How many times have you realized it wasn't lack of knowledge, but an impulse that took over in the heat of the moment? That's the signature of self-sabotage. The proof that the real battle isn't on the charts, but in your own head. It's a silent war between the conscious mind, which knows the rules, and the unconscious, which craves emotional relief. The unconscious doesn't speak logic. It speaks in feelings. That's why self-sabotage is so deceptive. You believe you're making rational decisions, when in reality, you're just rationalizing impulses. This explains why traders repeat the same mistakes after swearing they'll never do it again. It's as if they live in two worlds: the logical world that understands what must be done, and the emotional world that hijacks execution. And when it's time to click, which world wins? Always the emotional one. What's even more dangerous is that self-sabotage doesn't only strike in losses, it strikes in wins. Yes, you read that right. The most dangerous moment for a trader is not when they lose, but when they win. Because winning challenges the self-image of those who don't feel worthy. Too much winning creates discomfort. The account grows, but so does the uneasy feeling that it's only a matter of time before the market takes it all back. And to relieve that tension, traders sabotage themselves. They take impulsive trades, over-leverage, or interfere with positions that were already on track to win. It's not the market taking their profits. It's their own mind giving them back. This dynamic is invisible when you look at individual trades. But zoom out across 50, 100 trades, and the pattern becomes undeniable. Most losses don't come from bad analysis, but from emotional deviation. It's a cruel mirror showing the truth. The greatest enemy was never the market. It was always you. Block 1 is only the beginning of this dark journey. In the next section, we'll go even deeper into how self-sabotage feeds on both wins and losses, how it builds invisible loops, and why even the most experienced traders fall into the same traps again and again. Every trader thinks their worst mistake is a single moment of recklessness, the oversized position, the stop-loss ignored, the revenge trade after a painful loss. But the truth is more insidious. Self-sabotage doesn't usually destroy you with one explosion. It destroys you with loops, patterns that repeat silently until they become your normal. These loops are invisible in the moment, but when you zoom out, they form a cycle that traps traders for years. Let's start with one of the most common loops, the recovery spiral. A trader loses money, feels pain, and immediately craves relief. The fastest relief, another trade. Not a planned trade, not one that matches the system, but any trade that feels like redemption. That trade often fails, creating more pain, which leads to another desperate attempt at recovery. Before the trader realizes it, they've entered a downward spiral, where each loss doesn't just cost money, it reinforces the belief that they're out of control. And once that belief sets in, the spiral accelerates. Then there's the opposite loop, the euphoria spiral. A trader hits their biggest win of the month and feels unstoppable. Adrenaline surges, the brain releases dopamine, and suddenly every chart looks like an opportunity. They take trades outside their plan, not because of logic, but because the high demands another hit. It's no different from a gambler who can't leave the casino after a big win. The trader calls it riding the momentum, but it's really self-sabotage in disguise. The same mechanism that pushes them to recover after losses now pushes them to overreach after wins. Different emotions, same trap. Here's the brutal reality. Both spirals are powered by the same engine, an emotional spike. The brain is wired to avoid pain and chase pleasure, and the market offers both in endless supply. One big loss or one big win, and suddenly your unconscious takes the wheel. In those moments, you're no longer trading the market. You're trading your feelings about yourself. And the unconscious mind has another trick. It speaks in identity. If deep down you see yourself as someone who always finds a way to mess things up, every win becomes a threat to that belief. Success feels unsafe, so you unconsciously sabotage it to restore equilibrium. On the flip side, if you see yourself as someone who's always struggling, every loss feels familiar, almost comforting in a twisted way. That's why traders often stay stuck at the same level for years, not because they lack skill, but because they're loyal to an identity that doesn't match their goals. Think about the last time you broke one of your own rules. You didn't just lose money, you also reinforced a story about yourself. Maybe it was "I can't stay disciplined," or "I always ruin it when it matters most." That story becomes a self-fulfilling prophecy. Next time, your unconscious will guide you toward actions that keep the story alive. Because to the brain, being consistent, even with failure, is safer than contradicting the narrative you've built about yourself. This is why self-sabotage feels so invisible. Every trade seems justified in the moment. Each decision feels logical, but zoom out and the pattern reveals itself. Not just bad trades, but habits of thought that guarantee failure. The unconscious mind doesn't care about your account balance. It cares about keeping you aligned with who you believe you are. And until you rewrite that belief, the loops never end. Now let's look at how these loops evolve. At first, they feel like isolated mistakes. You overtrade once, you tell yourself it won't happen again. You move a stop just this time, and then promise discipline tomorrow. But the brain learns quickly. Each exception becomes easier. Before long, breaking rules feels natural, while following them feels restrictive. You've trained yourself to sabotage your own plan. Not because you want to fail, but because failure feels familiar. Here's the irony: most traders don't sabotage themselves in losing streaks. They sabotage themselves in winning streaks. Losing is painful, yes, but it doesn't threaten the self-image of a struggling trader. Winning does. When your account balance climbs higher than you've ever seen, the unconscious kicks in. Fear rises, not fear of losing, but fear of keeping. It's like holding something fragile and precious, terrified you'll drop it. That tension drives interference. You close trades too early, widen stops without logic, or jump into setups you'd normally ignore. It's not the market stealing your profits. It's your own fear giving them away. This is why so many traders experience the same heartbreaking cycle. They double an account, then watch it fall back to where it started. To them, it feels like bad luck, like the market turned against them. But in reality, it was their unconscious dragging them back to their baseline. And here's the harshest truth. That baseline was programmed long before they ever opened a trading account. Maybe you grew up in a family where money was always scarce. Maybe you were told rich people are greedy, or that every time you had extra, something bad would happen to take it away. Those lessons don't disappear when you start trading. They resurface. The unconscious clings to them as if they are survival rules. So when your trading account begins to grow beyond what feels normal, the unconscious panics. It finds ways to bring you back down, because losing feels safer than stepping into unfamiliar success. That's why you see traders who spend years almost making it. They study, they practice, they refine strategies. Yet every time they start to break through, something happens. A reckless trade, a sudden change of system, a random over-leveraged bet. On the surface, it looks like poor discipline. But underneath, it's programming. It's the brain saying, this isn't who you are. Let's get back to familiar ground. Here's the paradox. The brain is not trying to ruin you. It's trying to protect you. To the unconscious, survival matters more than success. And survival means staying in familiar territory, even if that territory is failure. That's why consistency feels boring. That's why success feels unsafe. The unconscious sees new territory as danger, and it will fight to keep you where you've always been. The loops of self-sabotage aren't random. They're carefully reinforced by your own actions. Every time you justify a deviation from your plan, you're building the loop stronger. Every time you ignore a rule to chase comfort, you're training your brain to sabotage again. It's not bad luck. It's not the market. It's programming.